Alright guys, Jason Greystone here. This week I wanted to put out a video following on from last week's video because we put a trade out on the Aussie dollar. Good trading opportunity. If you haven't seen that already, don't worry about it because I'm going to go over it again in this video because I had a few requests to do a follow-up video on that trade. So what I thought I'd do is break down the trade from start to finish, how we identified the trade, how we identified areas of entry, targets, where our stop loss needed to go, and then follow that entire trade as it played out. So we ended up getting filled. So in this video I go through how we identified targets, how we take targets, how we manage the trade once we're in the trade, and how we shot for those two targets. So we took one initial target, took some profit off, and then we shot for that extended profit target up at another level of structure. So I'm going to go through all that in this video, start to finish, from identify, predict, decide, execute. So grab a pen and paper, sit back and enjoy. Well guys, I just want to share with you an opportunity I'm looking at on the Aussie dollar, and it's really, since we put in this, found support down here at 70, just below that 7,500 even handle number, you can see we're pulling down and approaching that level again. So if we draw in a horizontal line at that level, you're going to see that it's a very well respected level of structure in this market. You're going to see that it's a well-respected level of structure in this market. You see we've been tested multiple times in the past. Each time it's tested, we see some kind of reaction, a hold at that level. You can see we had support here, resistance here, support here, and we're pushing down to that level again. And if we test that level again, the chances are we're going to see a reaction again. If it happened in the past, it's likely to happen again. So as we drop down to our trading time frames, what I'm going to show you is a potential opportunity down here at this level. So you can see we've got our higher time frame DSR zone already drawn in for us. This is a DSR indicator software that we're using to identify those dynamic support and resistance zones. This is the higher time frame, so this is set to the daily, and this is the 4-hour time frame. So you can see we've got higher time frame structure here, as we already know. We've got that even handle 7,500 level down in this area as well. We've got previous, so we know we've got major structure. We've got previous minor structure here in the form of this double bottom as well. Okay, so what we can do is start to build out a case for entry if you're looking for that counter trend or CTS style approach. Now, you might be giving yourself points for structure, major structure, minor structure. What we can do is we can further build on to that confirmation and try and think like as many traders as possible. So we want to build out a little zone down here and try and narrow it down as to and really try and identify the most highest probable area for a reaction in this market. So we're going to start by bringing on a equal measured move, and you can see if we bring on our equal measured move tool, we've got a completion down here at 74.86, which just so happens to line up in this zone at previous structure support. Okay, and what I'm going to do next is I'm going to bring on Fibonacci extension tool and try and see if we've got any confirmation or confluence down at that zone. You can see we've got a 1618 lining up perfectly with that equal measured move down there as well. Okay, we're not going to get a fib inversion or anything like that in this case, but we are going to get if we bring our fib retracement tool on from this swing low to swing high, you're going to see that we've got an 886 lining up in that zone as well. So we've got a harmonic move, 886, 4 pips within the 1618 extension, and previous structure. So already it's looking like we got some confluence in this tight zone down here between 74.85s and 74.90. So there's a 5 pip zone there that we're now paying attention to for a high probability trading opportunity. Now I'm just going to take off some of these to make it a bit clearer. Let's take off some of these. All right, so one of the things that you might be looking for is price action to come down, test this low, wait for RSI to go oversold, and you can see RSI is pushing down to that oversold level now. Conventionally, RSI is oversold, considered oversold at below 30. I have mine set at 20 because I want it as an extreme filter. And you can see we're pushing right down into that 20 level now. But as you push down to this level, this might be an area you look for that double bottom entry. And what you'd be looking for is a retest of structure, a valid retest of this level. Okay, and then you'd be looking for a next bar market entry, stops below the low, and then targets you'd probably be looking to base off of structure. Now, if you're looking to take this double bottom, targets you might base off of structure. If I was to take a double bottom entry and look for a pull, a pop back up, little small rally to get some profits, I'd be looking at these levels here for target. So target 1 I'd be taking at structure, target 2 I'd be taking at structure as well. So first level of structure is here. Previous support should become resistance, so I wouldn't want to shoot for a move beyond that point before I start taking profits. And then the second level is up here at this next level of previous structure resistance. Now, if you trade advanced patterns, we already know we've got an 886 down here because we've drawn it on already. Let's just draw that back in here. 886. Let's clear some of these off. We've got an 886 here, so as long as our B leg hits the 50%, which it does, and our C leg hits the 382, which it does, down at 75.63. You'll have to bring on your data box just to check your data on that C leg. Mine hits it to the pip. Well, then you know that we've got a bat pattern completion down there at the 886. So X to A to B, B to C, and a CD completion down here at 74.89. Now, so there's a couple of options for you depending on what type of trader you are. If you use patterns in your CTS score, you're obviously going to give yourself an increased score of 3 points for that. But if you're a pattern trader, then you're going to enter aggressively down at 74.89. Now my targets will be conventional targets, and if we bring on the 382 and the 618 here, look where that lines up. Right at those structure levels. So if we're looking to take the bat, target 1s are going to be up at 75.34, and target 2s are going to be up at that 618 at 75.63, which just both happen to line up with previous structure. So that's one of the trades on the radar today. So just an update on this pair. We're still looking at this level that we were looking at yesterday, and as we came down to this level yesterday, I think we were around we were trading around 75.18 I think when I put out the video, but we were eyeballing this level down here. We had our equal measured move lining up down at this zone. So we had previous structure support, equal measured move. Okay, so we had our bat pattern down here, completing down at 74.89. I front run my orders by 2 pips on the 60-minute time frame. I actually took this on the 60, and I got filled at 74.91. You're going to see that this candle here, the low of this candle was 74.91. Okay, so I said if we can push down to 74.91, I'll enter this at market aggressively. And whether you was structure-based trading or not, I'm not sure if we got a double bottom down here. Let's have a look. I don't think we got a double bottom. We did get a couple of doji candles, if that was your entry reason, and we also got a higher high, higher close candle just above that 75.01 even handle number. Okay, but what I did is I entered aggressively, and my targets will be conventional bat pattern targets Okay, so I'm looking at the 382 for target 1s. And target 2s up at that 618. Now what I love about that is that whether you got involved in a structure based trade, if you don't trade patterns and you got involved just based off of structure, and you're a structure-based trader, you're probably looking to take targets at structure. Now, if you bring on the horizontal line tool and put them at these levels, those are the levels that you're going to be looking for targets anyway, right? So whether you're in the bat pattern, or you're taking conventional targets, or you've got a structure-based CTS style entry and you used a higher high close candle maybe on your lower time frame, or even on this time frame where you got in just above that 7500 even handle, you see we had a higher close here, you'll be in this trade, and either way you got a decent risk reward if your stops are below X. My stops are down here at 74.56, but if you was entering as a structure based trade and you entered at 75.02, you may not be getting a one-to-one risk reward, so you may have considered a double bottom entry maybe, okay, or maybe you use a 10 pip stop or an ATR, but that's what I mean, guys. Hopefully this plays out. We're going to keep an eye on this and we'll update later on, and I'll update this in the war room meeting as well. But you can just see it's just a good demonstration of how building out these zones and narrowing down this confluence gives you the highest probable trading opportunities. And you can see we just bounced down straight off of that, put in higher close, followed by a higher close, followed by this candle here, which is looking pretty good as well. And hopefully we can smash through, take off some profits, roll our stops to break even, and then we'll be in a risk-free trade waiting for target 2s to be hit. Alright, so I just want to update you on this, the trade that we took on the Aussie dollar. Posted this out on YouTube, and we spoke about it in the war room meeting as well. And whether you was in that structure-based trade or you took it aggressively, you can see we had our targets up at structure. The reason we had them up at structure, if you was in the structure-based trade, is because structure's respected. So if you're looking to take some profits off of this trade, the areas you might want to look for are these structure-based targets. Now I was in the bat pattern, I entered aggressively, and I had my conventional targets set at a 382 Fibonacci retracement, and I've got my target 2s up at the 618 retracement, which just so happened to line up with previous structure as well. And you can see as we pulled up here and hit target 1s, we did respect that level. We had a push above, and then we closed below that 382, just below that previous structure support level. So we've hit target 1s now. We've respected that level, and hopefully what we're going to see is target 2s hit later on today. But if not, I've rolled my stops to break even now. Now target 1's hit. I'm in a risk-free trade to my secondary targets to take the other half of my position off up here at 75.63. So front run my orders by 2 pips, but 43 pips to target 1. And we'll see if we can hit target 2, so I'll update you later on. Right, so just an update on this Aussie dollar trade. You can see that we eventually came up and hit target 2s at the 618 retracement. 75.62 was my order, by front running my orders by 2 pips there. And you can see we've just respected that level of structure again. So if you had the structure-based trade on and you was taking your extended profit targets up here at the next level of structure, and you would have hit targets as well. But this is why you want to be mindful of analysing those areas for profit taking as well. Okay, so profitable trade, we had 43 pips to target 1, we had another 71 pips on target 2, so good trade. Let's see if we can get some more. Alright, that's it guys. Hopefully you can see how powerful being able to read structure is, and how to identify those levels of structure for targets as well, because really what people don't appreciate is the same amount of analysis needs to go into your profit taking as it does getting into the trade in the first place, because it's all good identifying areas of high probability in the market so you can involve yourself in a trade, but if you can't identify those areas to take targets, then you know, it's pointless. So if you are interested in coming in and learning how to do this stuff, or you want to watch me day in, day out, you can come into the live room, or we offer many courses on the website as well. Education is key if you're new to trading particularly, or even if you're not new. There's many traders in the room that have been trading for a while and they haven't quite got over that hurdle of generating consistent profits, and it's normally because they're stumbling from one system to the other. They think that there must be a better way, rather than just concentrating and building the system that they're on. So they come into the room now, they've stopped bleeding money, and now they're on the path to successful trading, which is really good. You come into the room, you're surrounded by a group, a large community of positive, like-minded people who all have one thing in common, and that is to be consistently profitable in the markets. And by coming into the room, it's completely transparent, and you're going to get to see me do this stuff every day. And obviously we offer many courses as well. Whether you're new and you want to just take the basics course and get your feet wet without spending a large amount of money, then we offer that. And obviously the Ultimate Trader Transformation course is if you're really going to invest. All the links below for those courses and products are in this video. And until next time, guys, I'll see you then.